Hello friends, my name is Dr. Bharath Chandra. These videos are meant for the benefit of the whole humankind, especially to all Indians, to create a large amount on a long-term basis. Today, we are answering some questions which appeared in our chat box. Many of the questions are so good that many of you are likely to learn many new things. My sincere wish is that please listen to the video till the end. First question, how compounding works? Will company gives interest for holding shares or share price moving up? How is it calculated? This is a normal confusion in the minds of large number of people. They think that by holding the shares for a long time, the company gives some kind of an interest like fixed deposit. Absolutely wrong idea. What happens is the company's revenue and in terms of profit goes up and the company's share value thereby starts appreciating. I will give an example. Let us imagine you purchased L&T at the rate of 1000 rupees and then L&T constructs bridges, roads, airports, big infrastructure projects, etc. And next year L&T made a neat profit of 20%. That means 1000 becomes 1200 rupees and this is called capital appreciation. 5 years later, assuming that L&T is making 20% per annum, it will become 2000 rupees and every year 200 is coming additional and for that you get compounding. So it might become instead of 2000, 2300 or 2400. This is called compounding. And similarly, if you look at Bajaj Finance, 10 years back it was 85, today 5800. 5800 minus 85 is the capital gains you got by investing in the particular stock. This is exactly what happens in most of the stocks. Now the second question in front of you. I'm a final year degree student. 15 days back, I did options trading. I lost 45,000 rupees. Now, how to recover the money? First of all, you are a student. You are not a trader. In stock market, there are two kinds of people, investors, traders. Investor is a person who is an employee or a professional, earns some money and in order to gain more improvement for his saved money, he invests in stock market. Trader is a person who has no job, his main job is stock market and his whole life depends from getting stock market profits. This whole channel of Dr. Bharath Chandra and Dr. Bharath Chandra's workshop actually deals with only the investors, not the traders. You are a student. I am still not able to understand how you went for trading. And next question is, whose money was that? If it is your parents' money and you lost that 45,000 rupees, they will not pardon you on this lifetime basis and they will discourage you from investing in stock market on a lifetime basis. What you did was absolutely wrong. This particular options trading or futures or intraday is only meant for traders and only meant for experts in the field. Now, at the later part of this particular question, you ask me how to recover this money from stock market. This is a second mistake because you may be thinking I did options in a wrong way, that is why I lost money. Now Dr. Bharath Chandra, please treat me the right method of options trading so that I will recover 45,000 and make few more lakhs in the days to come. Please don't think that you should get money from stock market only through options. The better technique would be go long term. You are sufficiently young, 5, 10, 15, 20, 25 years. You go on investing in SEP 5,000, 10,000 every month. You are likely to get lakhs and crores for the long-term investing. Today, in our Dr. Bharath Chandra app, we are uploading a Kannada question and answer session. ನಿಮ್ಮ 17 ಪ್ರಶ್ನೆಗಳಿಗೆ ಉತ್ತರ. That comes at around 8 p.m. and our wish that you download Dr. Bharath Chandra app from the Play Store. All the details are in the description box below, and also Rohan Chandra has put in front of you a separate slide on how to download the app. In this mobile app, in the store section, we have uploaded our very useful goal setting and time management online course in Kannada, which can be accessed at a nominal fee. Few days from now, we will upload how to activate your subconscious mind workshop. That also is worth taking as a self-development course. Next three questions are almost similar. First, I will read them. Sir, I started to invest in Axis Blue Chip Fund recently. What should we do considering recent sacking of fund managers of Axis Mutual Fund? Second question, Sir, Axis Mutual Fund scam. What is the future of investor? Third question, Hi sir, recently in some Axis Mutual Fund golmaal happened. So is it better to withdraw that mutual fund? How will it affect their investors who invested long back? We have a grievance against all our channel members. About Axis Mutual Fund, we have dealt in detail in our breaking news. Again, if you ask the question, again we reply. Many people will get bored and say, how many times you'll speak about Axis Mutual Fund? The matter is very simple and understandable. Two fund managers of Axis Mutual Fund have been suspended around 2 weeks back since they have been accused of front running. This front running is a very beautiful phenomena, better to understand it. Front running means to buy stocks after knowing that another big investor will be buying the same stocks after a few minutes. The two fund managers were buying stocks in their personal name before they placed buy orders to buy the same stocks for the mutual fund schemes which they managed, hoping that the stocks they purchased would suddenly appreciate because large amount of money is being invested in them. As of now, Axis Mutual Fund is investigating the matter and will announce the results of their investigation once ready. No significant impact on the investors of Axis Mutual Fund schemes except that the faith in the company may reduce due to the scam of two of its employees. Maybe a new fund manager will come, he will manage the things properly and there is no problem with the money that you have invested. The next question also is very useful for everybody. Large number of people have been asking for quite some time. And the question is, Sir, gold ETF, is it good for long term and can it give a good return? I have kept in front of you one slide. IDBI Gold ETF growth has given 11.4% returns, 5 years CAGR. Invesco India Gold ETF 11.3% every year it has given for the last 5 years. Now look at this particular data. Returns from gold in different periods. 3 years gold ETF has given 14% per annum, 12% per annum 5 years, 10 years 5% per annum, 15 years 11%, 20 years 12% per annum. In US, gold prices have gone up by an average of 8.1% per annum the last 20 years. It has appreciated by around 11 to 12% in India since the Indian rupee has depreciated against the US dollar by an average of 3 to 4% per annum for the last 20 years. Now look at this. May 2002 USD versus INR was rupees 48.7. It has gone up to 77.5. Indian rupee has depreciated by 2.4% per annum average in the last 20 years and 3.3% per annum in the last 10 years. Now our comments for your question. Gold returns are better than bank deposits in the long term. Second, they usually match inflation rates. 3. If thinking of investing in gold, it should be gold ETF, not physical gold. Fourth, tax on gain from gold is taxed at your income tax slab 10, 20 or 30. So after tax, whatever looks like 11 to 12% may come down to 6 to 8% per annum depending on the income slab you are in. Next question is really ultimate, very good, so we are replying. Sir, you have been discouraging people from buying penny stocks. But in the year 2000, Bajaj Finance was rupees 4. Was it not a penny stock at that time? Very good question. Please note that the stock price mentioned in Money Control and other websites is adjusted for bonus and stock splits. The actual share price would have been higher. When we say that Titan was rupees 7.79 in January 2000, it is adjusted to bonus and split, and hence the actual price was rupees 100 to 150 even at that time and was not a penny share. Similarly, for other companies such as Bajaj Finance, Infosys too. Now, to make you understand, I am going to give you one great example. IRCTC shares was split from face value 10 to 2. Before splitting, the shares in October 2021 was trading at 6,000. Then it fell because of the split. Totally, at that time 6,000 became 1,200. Today market has fallen and the 1,200 rupees share has come down to 670 rupees per share. If you check websites, it will show that the shares were around 1,100 to 1,200 because 6,000 divided by 5. Suppose IRCTC shares split their face value from rupees to 2 to 1, then the share price will fall to 330. Then if IRCTC gives bonus shares of 1:1 another 5 times in the next 20 years, then the adjusted price may look like rupees 10 to 20 even though it could have been actually trading at a much higher price at that time. But when we see the 2022 figures in 2040, it may look like a penny stock. That means IRCTC shares were trading at 10 to 20 rupees in the year 2022, though it is not a fact. Friends, if you are not the member of Stock Market Academy channel, this is your time to press the subscribe button, bell icon. Video is good, press the like button, and as a service to all people in India, send this video, forward this video liberally. Thank you for watching the whole video. Bye bye. All the best.